This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shahin.
Good day. This is Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth, here on every weekend, talking about all important topics of personal finance. My job is to go over the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short, where you can go and visit our Knowledge Center. And you can get this episode and any one of our previous episodes as well on our video cast through YouTube. And so many important topics, over 50 topics with well over 1 million views, folks, that goes over information that can help you in your financial situation. Where do we get that information? You send us inquiries at radio@falconwp.com. That's radio@falconwp.com. Now, I'm the president of Falcon Wealth Planning. We are a fee-only, non-commissioned, true fiduciary, folks, and we talk about all important topics of personal finance. That's where you are today, how retirement looks like, taxes, investments, estate planning, insurance, Social Security, retirement. You name it, anything that involves that dollar sign, we can help you with, which is why we're offering 1 to 2 meetings, 1 to 2 hours of our time at no cost, folks, to help relate this show to your specific situation. We would love to help. It doesn't matter where you're located. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. And boy, oh boy, is now the time of the year, let alone the month, let alone the week, with all the volatility that's happening right now. Oh my goodness, last weekend was a hoot. I should have recorded the show on Sunday instead of Saturday. Why? Because my goodness, you had what felt like everybody was saying, what's going to happen on that Monday? That Monday was insane. Well, not really. It was down 2 to 3%. It was point in time, it was down 4 to 5%, depending on the index. It just felt weird. So many things are going on right now. I want to list some of the things that happened this past week. The first one is the AI boom. Well, it's more like an implosion. It tanked. I mean, so many, from NVIDIA, from Apple, from Microsoft, from Intel, just so many things have dropped. And I personally believe it's because this whole AI thing is more hype than the reality is. I mentioned this in a podcast a month or two ago saying I wouldn't be surprised if the thing popped 20, 30, even 40+%. And oh, by the way, there you go, from 1,300 to 900, which with the splits is 90. I mean, it really got low. And when you look at overnight trading and so on, folks, you had, even on Monday, Robinhood, which started on Sunday, where they stopped their 24-hour trading, which, by the way, when you think that's a great thing, why don't other firms don't do it? The market isn't liquid enough. They're self-brokering those deals. They're making a killing. They make, on average, they reported 3% per transaction. That's insane. So I do not advise for 24-hour trading. There's a reason the markets don't do it. Now, do I think they'll eventually do it? I do think they can. I believe they can. But the problem is are there going to be specialists on the floor of the exchange? Human intervention is needed to stop these tanking, the selling, and so on, because the tech sell-off is real. It has happened. People, it doesn't make sense to be buying companies that are trading at 50 to 500 to negative price to what they actually make. It makes no sense. We wouldn't do that in a business, but we're doing it on the businesses on the stock exchange. Why? Because we think they're going to continue to grow and make money. It's just so crazy to me that people are doing this. The federal government, the Fed Reserve, is looking come September to start with the rate cutting. I hope they have no emergency meeting. Can you imagine if they do that? That could be an additional few percentage points that drop. I do want to remind everybody, a lot of this going on, whether it's the recession, a depression, or crash, heck, we're barely at a correction, that we've always recovered. Now, I get it. The history is no guarantee in the future. I completely understand, but boy, oh boy, it's a strong indicator. Companies are still going to be in business. Yet again, you had what's going on in Japan, other current events, dropped over 20% over the weekend. Insane. Dropping. Very bad since the bubble in the 90s. Now, you know what has been good is global bonds. Global bonds has actually done really well. It's one of the few things that are positive. Fixed income has done well. With interest rates down just a month and a half ago, you were getting a 7.5% mortgage. Now it's closer to 5.5%. That's a massive drop. That's a 2% drop in what? 60 days? 2% drop is quite substantial. That's like a 30% drop in interest rates. Heck, I can argue the bond market is more volatile than the stock market. Well, it's pretty obvious to me, don't you think? So what long-term effects does that have on people, especially when you piggyback that with more rate cuts coming here in September? Another big news, Warren Buffett, one of the generational best investors of our time, dropped 50% of Apple stock recently came out. Why would he do that? I don't know why he would do that. Maybe because of the whole IA craze that was coming up and they had a big bump in Apple because of that. He's always been a firm believer. I don't invest in what I don't understand. Well, this AI stuff, nobody fully understands. Even if the technology is there, the implementation and the full utilitarian use of it, you need people to program for it. I spoke to a client about this and he made a comment. It's like, we technically already have AI. Isn't that what your alarm is on your phone? I'm like, well, kind of. Yeah, you got to wake up at 6 in the morning. What if the app on the phone looks at your calendar, sees nothing there, and says, you don't need to wake up at 6 today. Let's wake up at 6:45. That's a very micro scale of what AI can do. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here, and every weekend talking about all important topics of personal finance. And today we're just talking about the concept of the markets dropping significantly. Now, here's what people don't talk about: how normal that is. Do you understand? Pullbacks of 5 to 10% could be as simple as a 1 month recovery. A correction of 10 to 20% could be a 4-month recovery. A crash of 11 to 23% could be a 5+ month recovery. S&P 500 down roughly 9%. Let's just say 10. I mean, oh yeah, by the way, from its record highs. I get it. There was chaos and madness. The stock, like I was saying, the trading, to be able to trade on Schwab, Fidelity, TD Ameritrade, E-Trade, Robinhood. Oh, by the way, you couldn't. The systems crashed because so many people were trying to log in. Like literally, you couldn't log in. It gave you an error if you wanted to log in. Yeah, I can understand the hysteria behind that. And by the way, it sucks for them because if people are looking to make trades, that's better for them. They make money on that, even if you're not paying a commission of $4.95 or whatever it may be. Vanguard also had issues logging in as well. So when everybody wants to log in at the same time, yes, server has issues handling that. Now, you would think from a trading site, it'd be easier. Now, I know here at Falcon Wealth, we're blessed. We have institutional ways of processing that, and we had no problem by doing that. I guess that's the value being on the professional side of things or the institutional side of things. Just my comment in general, big picture, is are you freaking out? Like, have I mentioned enough? We haven't even talked about what's going on in Ukraine or Russia still, or the Middle East. Heck, you have Iran that's threatening, posing massive threats against Israel. Now, Turkey is looking to get involved as well. Heck, you have Israel now having conflict with Syria, Lebanon, let alone Palestine. Like, this could be problematic. Man, I feel like there's a war coming. Well, there is war. But is it a world war? Well, I don't know. There's a lot of nations involved right now. Is that defined as a world war when you have so much involvement of other countries? We're so fixated on Russia and Ukraine, but who's involved truly in Russia and Ukraine? Who's sending troops and so on? My point of all this is, you know who else is watching this is the predators. Now, what does that mean? Well, there are people that's trying to sell you stuff. There's two things going on right now. Number one, gold prices are hitting highs. So now you're going to start seeing more late night infomercials of people saying, see, gold is the best investment you should be doing. What problem do I have with this? The places you're probably going to be looking to buy gold from are the places that are targeting you to buy gold. These are places that are largely unregulated. The problem with unregulated people trying to sell you gold is they can take full advantage of you. They could give you a 50%, 50% going in and a 50% coming out. You would have no clue. And the SEC can't really get involved in that either. This is the problem that I see quite often, folks, is people react. They are not proactive. And the problem with not being proactive is you fall into situations like this, where you ride the roller coaster of AI and tech. You ride the roller coaster of bonds. You ride the roller coaster of Bitcoin and Ethereum, which, oh, by the way, are down like 20% as well. I'm just saying I see this all far too often. And non-professionals, they struggle because they get emotional about this. Everybody wants to sell now, where professionals are actually buying. If you actually saw what happened that Monday, market dropped a lot more, recovered midway through the day, like substantially, like 1% to 2% recovery, depending on the indice. So I'm just saying that now, piggyback that, I said two things. With gold, you're going to start seeing more pushes on gold because it's done so well. And then you're going to start seeing annuity, insurance salespeople trying to sell you to see, are you really comfortable to lose all your money? Well, how about you show for long-term investments the chart of where that hasn't happened? Yeah, sure, you invest in Lehman Brothers, Barrett Stearns, Radio Shack, Toys R Us. Yeah, you can lose all your money. But when you're investing in an index, that's essentially a form of the U.S. economy, a large form of it. You have private sectors, public sectors, and government. Let's just keep it simple, and they're all about a third. But who really controls 80% is that 1/3 of public, because they are massive, trillions of dollars of value, billions upon billions of revenue. And you need those mega companies to be able to operate, forget the business, but also on the private sector. The question is what are you going to do? You're taking a look at your situation. You were heavily tech focused. You were heavily concentrated. And things are great until it's not. Your plan is fantastic until you get punched in the face. As a wise philosopher said, Mike Tyson. Well, now you got punched in the face. And by the way, there's more punches coming. How are you positioning your portfolio? You're just going to ride it out? You're not going to make any changes. Think about this, folks. This is why we're offering a free financial assessment to help relate this show to your specific situation, to answer the questions that you may have, see if you're properly invested, and see if you're not just investing in these zombie stocks or these overpriced securities, or you're just in a situation where you can't afford to take on unnecessary risk. We would love to help. Our phone number is 855-963-2526. That's 855-96-FALCON. Like the bird, or visit our website at falconwealthplanning.com. That's falconwp.com for short. We would love to help put together a plan and assessment for you to answer the questions that you may have, because it's not going to stop here, and it never does. There's always more going on. There's always more happening, and this news is just over the past 7 days. Like, think it's what's going to happen in the next 7 weeks. Let alone 7 months, elections and so on, let alone the next 7 years. Are you in a situation, in a position where your portfolio can help satisfy those needs? From what I see, you probably are not. Folks, when we come back, we're going to talk about ways and things that you should be doing during market volatility and what you should be looking at. I'll be right back after a few words. This is Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth. That's on every weekend. We're going over all important topics of personal finance. We're going over retirement planning, making sure you're prepared for retirement, Social Security and strategies, real estate, taxes, avoiding them now and in the future, investments, reducing fees, commissions, and so on, insurance, and estate planning. Folks, we are offering a free financial assessment that you could take advantage of. We have offices all across Southern California, including the Inland Empire. Give us a call to take advantage. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website, falconwealthplanning.com. That's falconwp.com for short. Enjoy the show. We look forward to serving you. Welcome back, folks. This is Gabriel Shahin, Certified Financial Planner, and your host, More Knowledge, More Wealth, here on every weekend, talking about all important topics of personal finance. And today we're just talking about how there's market volatility and what does that mean for you. You have so many things going on with the tech sell-off happening, with let alone with Bitcoin and Ethereum, let alone with the custodians not working with Schwab, Fidelity, TD Ameritrade, E-Trade, Robinhood, Vanguard. The Feds not cutting rates a couple weeks ago, looking to cut them in September. Japan, 20% drop just in a session last week. We had global bonds, actually, the only thing doing well. Warren Buffett says he's selling 50% of Apple. You got the Israel-Iran tensions that are mounting, and Turkey looking to be involved, and now you're dragging in Syria and Lebanon into the mix. You have all these things happening on the brink of a correction. Some are thinking, is this possible from a crash when you start looking from the highs? Yes, pullbacks happen. They're very normal, very, very frequent. And the question is what do you do for that? One thing I would recommend when you take a look at your portfolio is just take a look at the correlation of the portfolio. Now, what does that mean? It sounds like a fancy word. Now, when you take a look at what you're investing in, if you're investing in, and let's just say, assuming with all your money, 50% of your money is in, let's just say, Apple, NVIDIA, Amazon, Microsoft, Google, Tesla, and Facebook. Let's just assume it's those companies, okay? The problem, of course, with that is they're all tech companies. Like, seriously, there is no diversification. Well, let's switch it up a little bit. Let's just say all your money is in the S&P 500. We talk about that all the time. It's the standard to invest because that averages over 10% rate of returns. By the way, it averages over 10% rate of returns, especially with market crashes and drops and corrections and recession. So it's still average 10% rate of return. But the question is you may be needing money at a point in time. Or what strategy can you do outside of just buying more stocks when the market drops? And how do you know when the market is at its low? So you're just going to continually buy. Is that literally an investment strategy? No. That's buying into the market strategy. They call that dollar cost averaging. So it's not really an investment strategy. You're not deciding when to sell anything. So yet again, that's a buy and hold strategy that you're just adding money into the market. Well, have you looked at or considered there are different aspects of investing in markets? S&P 500, which is the standard, S&P stands for Standard & Poor's. That what I meant was the standard of investing. That's what people think. Is just one asset class. It's just large cap. It's a blend of large cap investments. Well, have you looked at splitting that up between growth and value? Do you know they're going in different directions right now? In addition to that, there's mid-sized companies, small-sized companies. All of those have growth and value as well. Have you looked at, in addition, international companies, developed markets, emerging markets, and then you got bonds? Listen, I don't care for bonds. I hate bonds. But at times like this, especially if you're risk averse, bonds can significantly help in your situation. My question to you is, what are you doing right now? You may not be doing anything. Think about that for a second. If you're doing nothing and you're just watching this drop happening, I don't understand what you're doing and what you're thinking. Because you have, in just a week, in 5 days, from Monday to Monday, let's just say, compared to what's going on in the overall market, you have maybe the large cap growth dropping 7% in just a few days, and you have large cap value maybe dropping 4%, less than half. So if you had, right, the markets do three things. If you split up the indice between growth and value, such as large cap. Large cap, one could go up and one can go up more. Growth versus value. One could go down, one could go down more, and sometimes one goes up and one goes down. No matter what, in those three situations, if one goes up and one goes down, you sell the high and you buy the low, right? You sell your profits and you buy the losers. Well, what if it goes up and another goes up higher? You sell the higher one and buy the lower one, right? That's called a rebalance. And lastly, one may lose money and one loses more. You buy the one that's lost less and buy the one that's lost more. That's taking advantage of volatility, folks. And a lot of people just don't do that. And you cannot do that with just investing in the S&P 500. Keep in mind, by investing in both growth and value, you're essentially are investing in the S&P 500. You're just allowing yourself to be more diversified. And what we notice from people, they just don't care or know how to do that. And it's unfortunate because this is their money here. And they're just going on social media and people talking about my dividend check came in of $1,000, not putting any context of how old they are, how much money they have, or how much money they make, what their liabilities are, what their long-term and short-term goals are. This is why it's important to talk to a financial planner, a financial professional. Take a look at your situation, answer these questions that you may have, especially in times where the market is volatile. I mean, nobody likes to see their portfolio drop in thousands. Some people, hundreds of thousands. Heck, some people might have lost millions of dollars in this recent market drop. So if you're still doing it on your own, my question is that's fine, but what strategy do you have? Do you have any downside protection? Do you have multiple different investments? Are they correlated properly? If not, you should talk to a professional. They can help put something together to answer those questions for you. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We want to be the ones that help you in your journey, your financial journey, answer these questions, especially in time where you don't know where to turn, when everything seems to be going down. Question is what are you doing when that happens? Because really, the international bond index, government bonds, seem to be one of the only things outside of gold that are doing well. Everything else is doing poorly. It's funny how those who are investing in cryptocurrency were saying, I want those because it's uncorrelated. Well, look what happened. Be careful what you wish for. Now it's mainstream. So now you have retail investors that get scared and it's easy for them to sell. It's not easy to sell when it's in a wallet, let alone a cold or hot wallet. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth here on every weekend. And we're talking about all important topics of personal finance. And there's just no shortage of items to discuss right now because of everything that's going on in the market. All I'm trying to say is don't let the predators now come after you. We talked about gold in the first segment, but insurance is one of the biggest things. These fixed index annuities are often heavily scrutinized by our state and government agencies because it's often misrepresented of how they work. And what do I mean by that? What I mean is that a lot of these guarantees there's a lot of things in between those lines that you're not fully aware of. I'll give you a few examples right now because people are going to start selling you on this, especially if you have one or have one in the past. Now your name is out there as you've been sold. And they're going to keep coming after you because they see easy money. There's a reason the industry rewards some of the best commissions from insurance sales because nobody would ever buy them unless somebody jammed them down your throat. Doesn't make sense for a majority of people out there, a mass majority, especially people taking out their retirement account and putting it into a fixed index annuity, a variable annuity, any type of an annuity. Think about that for a second. Why would you take money out of a retirement account, which is tax deferred, to put in another tax deferred? It defeats the purpose of the tax deferred annuity. Yet again, makes no sense. But yet again, people do it all the time. Let's continue the conversation. Then they say you can guarantee not lose money. Okay, that part's true, except you lose money safely by barely catching up with inflation on some of the return numbers on this. Some of them, you can't make any money on it. I'll give you an example. It's very difficult to. They'll always show you a year in the market that just goes up steady year by year by year. But the reality is, or month by month. So they'll say the max you can make every month is 1.5%. But they don't tell you the max that you can lose is unlimited. So it could be a month where you're down 10%. And if every month you're capped at making 1.5%, that's assuming the stock market makes 1.5 a month, then you lose all your gains for the year. It's the contracts. They're literally contracts that you sign where you're giving your money up to the insurance company for a guarantee. Now, variable annuities are at least invested in the market. Now, it's super expensive and unnecessary to do so in most situations, unless you just want to give up your money where the IRS says you're going to lose 50% of it. Hence why when you do a charitable version, they give you a 50% write-off because everybody's a loser. Well, not everybody. The insurance companies are the winner. That's why people do charity ones and they get a 50% write-off going in because in their case, they're not losing, they're giving, they're donating. But obviously in the case of a commercial annuity, yeah, you're the loser. I just don't think you know it. Right? When you give money for something, you expect something in return. You're often misrepresented of what you're giving your money for and what you think you're getting. The doubling of your money every 10 years, try to take your money after 10 years and walk away. It does not work that way. Be careful. That's all I'm saying. Talk to a fee-only advisor, folks, not fee-based. They can sell you those annuities. They say they're doing what's in your best interest. They say they're fiduciaries, but what they're not telling you is they're not always your fiduciary. 100% of the time, they have to act in your best interest, or they can't make any commissions of any kind, or they can never take off that fiduciary hat and put on a commission hat. That's the case. Why do they have their licenses, Series 7 licenses? That allows them, their insurance licenses. Ask them, do you have those? If they have them, they can sell products to you and take advantage of you. Talk to a fee-only advisor. Here at Falcon Wealth, all certified financial planners. That's all our financial planners here are certified financial planners. We gave up our Series 7 licenses, our insurance licenses, when they come work for my company. I wanted to build a company that can help you and answer the questions that you have and make sure you do not get taken advantage of. This is why I built a firm where everybody at my firm is salaried. Listen, we're not a nonprofit. Don't get me wrong. We're a fee-only firm. Some people write checks to work with us. Some people, we do manage their money and get a percentage of that. But the idea here is we are transparent. No third parties are paying us at all. If you want help, we'd love to help you. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short. Take a moment to take a look at what you're doing and if you have a proper strategy in place. Because I don't care how smart you are. I don't care how much experience you have. Doing it on your own is difficult because you're busy in your day-to-day life. And depending on your age, you could be leaving stuff on the table. If you're in your 30s, 40s, and 50s, you're busy working. You're thinking, who cares? I'm making enough money. I'm buying every other paycheck. Well, if you're in your 60s and 70s, maybe you have the time to do it, but now it gets emotional because now you're thinking to yourself, I can't afford to make a mistake. I get it. Give us a call. We'd love to help. Whew, folks, that was a fast show. I want to thank you for tuning in with us. You can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's falconwp.com for short. Where you can visit our Knowledge Center and get this episode through YouTube, where you can get some fantastic content, let alone this episode and any one of our previous episodes. But we have so many great financial planning ideas, topics for you that we can help execute you on. Give us a call. We'd love to help you with that. And we have well over 1 million views on that. And send us an inquiry at radio@falconwp.com. That's radio@falconwp.com. If you wanted us to discuss something on the show or for us to record something, sometimes we get really good inquiries, which is part of why we're doing this one. We got multiple inquiries talking about the markets that are dropping. But folks, I want you to have a fantastic weekend. Have a great week, and God bless.